Get ready, crypto fans. Bitcoin Bulletin is dropping the hottest news you need to know. We've got a deep dive into what could derail Bitcoin's massive rally to $120K, with analyst Omkar Godbole breaking down the key factors to watch. Is the bull run facing headwinds? We'll break it all down. Then, we're looking at how the latest CPI data is lifting market sentiments and pushing Bitcoin prices near 115K. Is this a sign of sustained growth or just a temporary boost? We've got the insights. But hold on, because we're also uncovering concerning indicators from CryptoQuant analyst Maartunn that might signal a bearish turn for Bitcoin, even as prices climb. Are we heading for a sharp correction? And finally, we're breaking down a massive $4.3 billion Bitcoin and Ethereum options expiry event happening today, right ahead of a crucial Fed decision. Could this trigger major volatility? Stick around, you don't want to miss this. Hit that subscribe button and ring the bell so you never miss an update. Bitcoin's road to $120K. 3 potential roadblocks revealed. Bitcoin is on a tear, breaking out and eyeing that massive $120,000 target, with key technical indicators like the 50-day SMA and GMMA flashing bullish signals. Momentum chasers are getting excited, but is it all smooth sailing from here? Analyst Omkar Godbole warns that not so fast. He's identified 3 critical factors that could put the brakes on this rally. First, Bitcoin is approaching a notorious bull fatigue zone above $115,000. We've seen this before, with long upper wicks on monthly candles indicating strong selling pressure pushing prices back down. This level has historically acted as significant resistance, and buyers might hesitate to push past it again. Second, the US dollar's reaction to the Federal Reserve's potential rate cuts is a major wildcard. While traders are pricing in aggressive cuts, the dollar index remains surprisingly resilient. If the dollar finds strength, it could cap gains for dollar-denominated assets like Bitcoin. The Bollinger Bands on the dollar index are tightening, hinting at a potential big move that might not favor BTC. Third, the long-term outlook for Treasury yields presents another challenge. While many expect yields to plummet, long-term charts suggest a bullish shift, potentially limiting the influx of cash into riskier assets like Bitcoin. The expected flood of money from ultra-low interest rates might not materialize as anticipated. Traders and analysts are closely watching these signals, with community discussions buzzing about whether Bitcoin can overcome these hurdles. The market is on edge, wondering if the rally has legs or if these factors will lead to a significant pullback. Will Bitcoin conquer these challenges, or will these 3 factors lead to a sharp reversal? Stay tuned as we break down the next crucial update on Bitcoin's price action. CPI data ignites Bitcoin rally near $115K. Bitcoin is trading near the $115,000 mark, with recent Consumer Price Index (CPI) data providing a significant boost to market sentiment. This positive inflation report, which met expectations, coupled with a higher-than-anticipated rise in jobless claims, has strengthened the market's conviction that the Federal Reserve will likely cut interest rates sooner rather than later. The market is now pricing in substantial rate cuts by the end of the year, a scenario that typically favors riskier assets like Bitcoin. The expectation is that lower interest rates will stimulate economic activity and encourage investment in assets with higher growth potential. This dovish outlook from the Fed, contrasted with other central banks, creates a favorable environment for a weakening US dollar, which in turn supports Bitcoin's ascent. Traders like BitBull have identified the $113,500 level as a key support that has now flipped to resistance, with the next target being $117,000 to confirm a new all-time high. InvestorGel believes that with inflation under control and the market anticipating a rate cut, the stage is set for further upward movement. However, not everyone is entirely convinced. Some experts are cautious, suggesting that the market might test current support levels before a significant upward move. Analyst Skew has even warned of a potential liquidation trap, where a sharp move could trigger mass stop losses for traders who have entered long positions. The community is actively debating whether this rally is sustainable or if a correction is imminent. As Bitcoin navigates this optimistic sentiment, are there hidden dangers lurking beneath the surface? Get ready for a look at surprising bearish signals that are flashing despite the rising prices. Bearish signals emerge as Bitcoin surges above $116K. Even as Bitcoin's price surges past $116,000, a concerning trend is emerging from key on-chain indicators. CryptoQuant analyst Maartunn has highlighted that a staggering 8 out of 10 components in the CryptoQuant Bull Score Index are now flashing bearish signals, a stark contrast to just a few months ago when most indicators were bullish. This cooling of investor sentiment is evident across several metrics. Indicators like the MVRVZ score, profit-loss index, market cycle indicator, and stablecoin liquidity have all entered the red zone. This situation is reminiscent of April, when Bitcoin experienced a significant price drop. The contrast is stark. In July, with Bitcoin at $122,800, $8 out of 10 indicators were bullish. The timing of these bearish signals is particularly interesting. They emerge shortly after the release of U.S. Consumer Price Index, CPI, data for August, which matched forecasts. Simultaneously, weekly jobless claims hit a record high since October 2021, further strengthening market expectations for a Federal Reserve rate cut. While this news has fueled optimism for a rally, on-chain data suggests underlying caution. Despite the positive macroeconomic news driving Bitcoin higher, with traders like BitBull eyeing new all-time highs and investor gel expecting a rate cut to propel the market, many analysts are urging caution. Expert Skew has warned of a potential liquidation trap, pointing to significant liquidity clusters below current prices that could be targeted. The market is divided, with some anticipating a breakout and others bracing for a potential downturn based on these internal network signals. With these conflicting signals, what massive financial event is about to add another layer of uncertainty to the market? We're diving into a multi-billion-dollar options expiry that could shake things up. Billions in crypto options expire ahead of Fed decision. Nearly $4.3 billion in Bitcoin and Ethereum options contracts are set to expire today, a significant event that could inject volatility into the market just as traders anticipate a crucial Federal Reserve interest rate decision next week. While this expiry is smaller than last week's, these events often create price swings. Data from Deribit reveals that Bitcoin options expiring today have a notional value of $3.42 billion. The put-to-call ratio for Bitcoin stands at 1.31, indicating a higher demand for put options, which are used to bet on price declines. This suggests that many traders are positioning for potential short-term weakness, seeking downside protection. For Ethereum, the put-to-call ratio is slightly lower at 1.03, showing a bit less bearish positioning compared to Bitcoin. Both Bitcoin and Ethereum are currently trading above their respective maximum pain levels. This metric indicates the price point where the largest number of options contracts would expire worthless, leading to the biggest losses for traders. Historically, prices can drift towards this level as expiration approaches. Bitcoin is trading above its maximum pain price of $113,000, and Ethereum is above its $4,400 level. The market's focus, however, is increasingly shifting to the Federal Reserve's upcoming decision. There's growing optimism for a potential rate cut, which could further fuel a rally if confirmed. Analysts note that implied volatility remains relatively calm, with the market largely pricing in a 25 basis point rate cut. Despite this, there's considerable divergence in market sentiment regarding the latter half of the month, though overall volatility expectations remain subdued. With these massive expirations and economic decisions looming, is the crypto market truly ready for its next major move? Don't go anywhere, because we're wrapping it all up with a lightning-fast recap and your full call to action. And that's a wrap on today's Bitcoin Bulletin. We've seen Bitcoin eyeing $120K, but facing potential headwinds from resistance levels and dollar strength. CPI data boosted sentiment, pushing Bitcoin near $115K, but bearish on-chain signals are flashing. A massive $4.3 billion in crypto options just expired, adding another layer of intrigue. Did you find this update valuable? Smash that like button, subscribe to Bitcoin Bulletin for all your crypto news needs, and ring that notification bell so you never miss a beat. Follow us on all social platforms for more real-time updates and join the conversation in our community. We'll see you in the next one.